All right, we got a carrier update with the Sultan of Sonar, Zach Strickland. What are we looking at?
Yeah, Andrew. So I've got our seasonality for outbound tender rejection index pulled up here. This is going to show the last 3 years underneath that blue line there. That is our current year, and you can see we are hovering. We just bounced up a little bit. It's like this floor keeps persisting around that 22.5% tender rejection rate. The interesting part of this is that if you look, we've actually gone underneath a line for once in the past year. This is the first time we've actually gone below something. Now that purple line there is 2018, so we're actually seeing better compliance than we saw in 2018 at this point in time. Which I found, somewhat interesting because we've been talking about how this is like an unprecedented year, that we've never seen something like this before. Well, now we can say that we actually have. We're out of the unprecedented times, if you will.
Yeah, out of the unprecedented times, but still 23% of freight being rejected. Not exactly ideal for shippers.
No, not at all. So, market's still extremely tight, and we do, if you see that little bump there, every single year we have a little bit of a bump leading into the 4th of July, end of June. We normally see a little bit more activity. It's kind of like this early June lull that we see the first couple of weeks of the year. Here in the next week or so, we'll probably see this thing bounce back up over 23, 24% potentially. I don't know that, but the history kind of, predicts that we are going to see an increase of some sort. What's going to be interesting though to see is if we see a 2018 style line where we continue to see this. But what I think is going to happen, we're going to have a little bit of a bump, and then it's going to continue to kind of slowly get better for shippers out there. Not necessarily 22, anything over 20% is unsustainable for an extended period of time. So we'll see this probably start to retract. Now, what may happen in the third and fourth quarter will be a very interesting segment. But July typically does see, except for last year, July, if you look at all the other years, July does see these tender rejection rates start to come down, as that is the most vacation time of year next to Christmas.
Right. So what else do we have coming out? I think we're looking to take a look at California.
Eventually we're going to take a look at California. Let's look at our volumes first, make sure our demand is in check. This is the thing that makes me think that we're not necessarily going to see any declines in tender rejection rates here in the next little bit. Our demand is as high as it's ever been. We're up here around the same level that we were on Labor Day, close to Thanksgiving last year, and of course March. We just have not seen any significant declines in demand. So the tender volume's still strong right now, 15.6. We seem to bounce up against the 16K number on the OTVI repeatedly. Just can't get through it, which is probably a decent thing, but at the same time, we're at the capacity of the market at this point. So let's check out where in the country. Now I've got a new index to throw up here. So the map today is not the traditional WRI that I like to look at for the weekly changes. This is going to be more of an overall change. This is more of an overall capacity situation. Our capacity trend scores. Now these are market scores based from 0 to 100. The higher the number for this index specifically on the carrier version means the tighter conditions exist. So you're going to have market balances where you're going to have excessive outbound in relation to inbound, and also relatively high tender rejection rates. So when you look at those two things together, the darker the blue you see, those are the higher capacity trend scores for the carrier side of things. So these are going to be the markets where you see the tightest conditions persisting. So higher rejection rates, load balances are, to the outbound side. And you see down here in the Southeast, this has been the big story over the last several months, is that the Southeast volumes really driving a lot of the capacity tightness right now, because this is the most rejected region of the country. Talked about it with Mike Vincent yesterday, up around 30%. Now out there on the West Coast, like you mentioned earlier, we've got Ontario. Now this, if we go to the next map, this will put this map into a different perspective, showing you the highest capacity trend scores to the lowest capacity trend scores down here on the bottom right. And those percent changes are the week over week changes. So Ontario, 14.1% up week over week in the capacity trend score. They got a 98. That's about as high as you can possibly get. And the reason for that I'll illustrate here in just a second. But if you look throughout the country, a lot of these markets over here are going to be, in the Southeast. We've got Greenville, Chattanooga, pick them out. They'll be over there more than likely, because Tifton, Georgia, Savannah, Georgia, of course, Atlanta, the biggest market in the Southeast, all have really high capacity trend scores, 86. So what you can take from this is that those numbers It's like the capacity is similar in each of these markets,
right.
Regardless of volume overall. So it just means that you're going to have similar tightness conditions in each of these markets. So if we look and we break out the Ontario market real quick, this is what I'm talking about. So I've got our head haul index in purple, and we've got our tender rejection rate here in blue. And you can see tender rejection rates jumping up over 21% out of the Ontario market. The head haul value, look at this trend line right here. It's really following the, over the last couple of months, we're starting to trend. We're trending much higher at the head haul index. And of course, that's our 164. That means that it's OTVI less ITVI, extreme amount of outbound volume in comparison to the inbound volumes. So this market right here is definitely one that's going to need some more attention, even though we've seen these are relatively low rejection rates compared to the rest of the market.
Right, especially going to need attention given all the port volumes that are coming in. There's going to be basically nonstop volumes out of the West Coast, right?
Yeah, and this market right here, this is where all those DCs are. Los Angeles, that's where the railhead is. That's where you hop right onto the truck and get, out east. This is that market where they kind of stage it for a minute and then start to head. So this is definitely one of the biggest markets in the country right now.
All right, Zach, thank you so much for your carrier update.